Well, welcome back, everyone. It was an exciting FOMC day in markets today, and I'd like to share with you some of the insights on where the market was expected to go from insights and tools that both Rob and I have been talking you through over the last several videos here. And where did it end up? What does it all mean? Let's go take a look at the chart of the SPY to get started over here. And similar to the video last night, this is a daily candlestick chart of the S&P 500 ETF, the SPY. You can see January 2022 highs in the 480-ish area, the October lows. We were looking for this time being different in the yellow box and a break above that 414 marker, which you heard me talk about from really the end of March onwards. Got the breakout, got a push up to the top of this 2 standard deviation channel. And where we are is not only above the 50% retracement, the 61.8, and we're above the top end of the pivot range for the week. So I'm going to zoom in a little tighter here. And these are daily candlesticks for the SPY. The hard right edge is today. And you can see as I zoom in over here, I'm just going to get you a little tighter in there, that we are dealing with an indecision candle. We've got a tail, we've got a wick, and we've got a small body on the candle. So there was clearly a drop. That's the bottom of the tail. There was a pop that took us above the highs of where we closed, so that's top of the range. But we ended up settling just underneath that 2 standard deviation channel, and of course above the top of the weekly pivot range, around 435 for the SPY. What does this mean based on how the Fed presented their wares today? Well, the Fed actually overtly leaned more hawkish in their dot plot, and Powell tried to tamp some of that down during the Q&A. And our expectation from the active trader room prep session that we did earlier today and thoughts from yesterday was the initial move is likely down. We probably come down and see closer to a dollar radius around $433 and then bounce up. That bounce up then has the chance to take us back up to the highs of the day or higher. So the first part was definitely correct. We did come down, and I'm going to show this to you in a more detailed chart in just a moment where I did some live trading today on the S&P E-minis in particular. There were other areas that I focused in on like oil, silver, precious metal miners, volatility as well. And we'll focus our conversation here, though, on the ES, of course. So the ES is going to be put on the next chart. The SPY and the indecision candle with the current momentum has not said it's breaking down. It is in an area where it's likely going to require refueling, a pullback and then push back up to highs. Well, that's also the state that the Qs are in, breaking out to a new year-to-date high well above the weekly pivot range, well above the 61.8% retracement that the S&P has gotten above, and of course, potentially on its path to the next retracement line. Now, does it have enough gas in the tank? Well, the answer generally is no for most things. So the idea that we have for tomorrow and the impact that the Fed has really centers around the dollar that got oversold and the Eurozone central bank tomorrow morning not taking a very hawkish stance, not choking off growth. Euro goes up, dollar goes down, and that's all pre-market. And the dollar is down enough that it's in an area where it's likely then to bounce. So a little bit more positive continuation in the pre-market and or shortly after the open tomorrow is the expectation. Stocks a little higher. Silver potentially a little higher, dollar a little lower, and then a turn. Dollar goes up, silver goes down, and the market potentially goes down. Now, how can we give you that kind of an outlook, and how did I take advantage of the moves in today's trade? So I'm going to take you over here, over to my next instance of wealth charts that has got a slew of indications on a 1-hour bar chart for the S&P E-minis. So this is what I was trading in front of members earlier today. What you see at the hard right edge of the screen is the 12 a.m. Eastern Time bar for today, June the 14th. So as I start bringing the chart across, the state that we are in is important to note. We had a negative momentum shift, evidence right over there. That was yesterday at 1 p.m. We have a weakening of the bullish momentum from the ITP triggers. Okay. We also have spotting, blue and red, crossover signals on the TRP indicator, which also comes with on-chart targets. As you're going to see in a moment, I use those extensively in today's live trading. We got a blue dot, which is a positive, followed by a red, followed by a blue. So the indecision over here at the top of this channel that's got 4 quadrants was a very clear tell. And in fact, the tell started right back over here at 5 a.m. yesterday from the TRP crossover. Pretty impressive to tell us that hey, we may be able to go a little higher, but it's not going to last. We're going to have a pullback of some sort. Boy, did we indeed have one today. So I'm just going to take that off the screen. That's one of my other brokerage accounts that just has an automatic renewal there for the passwords. So I'm going to bring the whole screen off at once rather than candle by candle. And what I want you to see over here is from that time frame that I brought to you, June the 14th, the 1 a.m. bar, 12 a.m. bar, and onwards. What happened? So as of this territory, we did get a pop-up in the market into the Eurozone Open. We did break the negative momentum shift. We did see continuation of the bullish market state that we are in. And we did also see a pause, a little bit of indecision into some of the data from this morning. We then saw lift off after the data presented, a cooler than expected producer price index. It all culminated in a fairly stark negative divergence on the 11 a.m. Eastern Time bar. Now, we know that the bullishness is losing its strength, not gaining any more as we're rising. The ITP triggers can tell us that. And, of course, the TRP crossover lines were consistent in their signaling from all the way back here, telling us that this is not likely to last. We're going to have a pullback of some sort. And I think what we then can take from there, seeing as how the day played out, is that as prices rise, I'd rather sell into strength. And then what did we expect for Powell to do to the market? When the statement was released at 2 p.m., I was expecting a down first. I was expecting, and I let members know, from $438, a $1 radius around there is where we're expecting to be before 2 p.m. So we got that, and then probably come down within a $1 radius around $433. Now, take a look at the TRP signal right there, that cyan dot, that blue dot right there. We have the insight from the TRP crossover lines that we are likely going to be rising, and then that rise is likely going to be torn down. The TRP sell signal that you can see very clearly, very, very clearly right there on close of that hour bar, gave me the higher probability to delve into the shorter term time frames and play short. So this signal occurred as of completion of the bar, the 1 p.m. bar, and the rest was history. You can see that the targets 1 and 2 on that TRP sell signal were both achieved. And then we have that tear back up, and the market is in a rebound trying to get back up towards today's highs, which are likely going to be tested. And then, based on the weakening momentum, the sell signal stayed on the TRP crossover. Any bounce back up to highs or slightly higher has a high probability of being sold back down in tomorrow's market. So I did a little bit of trading, and again, all trading is at the independent trader's risk. Past performance does not equal future. I've limited my account, limited it to only 2 contracts, and I, for the majority of the trading today, was doing only 1 contract trading in front of members of the active trader room. So I cannot guarantee that results like these can happen every day. They are not an indication, past performance, for future results, nor is it an indication of past track record. But what I can tell you is I used the TRP sell signal on that bar, which was in play all the way towards the end of the bar and then confirmed, in conjunction with the 5-minute time frame, which I'm going to make a bigger chart on your screen right now, and pull it back and give you a little gander of where the signals on the 5-minute chart gave me the opportunity to start playing short on the ES. And it was as early as 12:30 p.m. Eastern Time. When we started to get more sell signals and the champion trend and champion cross all coalescing into a sell signal state together, we, at that moment in time, right in and around here leading into the FOMC, there was some short to have available. However, it really was leading right into that 2 p.m. marker where champion cross, champion trend, TRP, and the whole kit and caboodle together came together for shorting into 2 p.m. and thereon after. So that's what a member saw me do, and the gross was around $875. And again, all trading is at the individual trader's risk. It is not something that one wants to take willy-nilly. We are in a marketplace where there's a higher probability when signals converge on each other that you're likely going to see a outcome in that direction, and that's what we got. Now, back to tomorrow. Back to tomorrow, my expectation is that the market can make a slightly higher high, then needs to refuel. You're looking at the same sort of stuff now, but on a daily time frame. The daily time frame has got Rob's ITP triggers throttling. The TRP crossover is still positive and has room to run before it hits the top of the channel. This is all positive stuff, but does the market have some risk of refueling? My answer to that question is likely. We may be able to see a higher high first, and I think that that is likely, where we could come and stretch out even to the midline TRP target, and that would be around 44.27 on the ES. And then my expectation is come back down to refuel before attempting another rise. I'm hopeful that this was a useful video for you that gave you some perspective on my market outlook over here. Really hours with Rob's tools overall, and we're quite pleased on the breakout overall for markets. This is a market where we are super stretched, taking great care and respecting the fact that we are very far away from normal is at utmost importance for traders as far as I'm concerned, and this may provide a little further long opportunity and then a fairly decent drop back down that could be played on both sides. I'm looking forward to more on that tomorrow. Have an incredible rest of your day. Thank you for watching, and I hope that that targeting on the TRP and the signals came together for you on this video and added a little bit to your trade thinking. Have a great rest of your day. Bye for now.